Holy smokes, ladies and gentlemen, Tesla stock was up 3% today. And now you're down about 2%. At the time of recording this video, I will share with you all of the news, why Tesla went up, and why Tesla and broader markets came right back down. And for pretty much half the day today, Tesla was showing true exceptionalism. You were outperforming. I mean, Nvidia, for an example, has been down like 5+% all day, and Tesla was up 3%. It was a big and noticeable outperformance. I believe that is because Tesla is already down 40+% from all-time highs, and if we bounce, Tesla's gonna bounce a lot. In which markets did kind of bounce in the beginning of the trading day, did obviously give that back at the time of recording this video. The S&P is down almost 1%, but I think that is a pattern that we can expect to see. And we have a bunch of good news to go over, so bear with me. We will get into what is negatively affecting the stock and broader markets in just a moment. But first things first, the good news should not be overlooked, because that's kind of what everyone is doing right now, is overlooking the good news, hyper-fixating on misleading headlines, and that is why Tesla's down 40%. And that is why there is such a massive opportunity right now in Tesla stock. First and foremost, Morgan Stanley's Adam Jonas has reinstated Tesla as their top pick in US autos after the recent 30% fall in the stock price. Yeah, I don't know if he made this a while ago, but yeah, the stock is down over 40%. He says lower car deliveries are emblematic of a company transitioning from a pure automotive play to a diversified AI and robotics play. And even an individual like Adam Jonas is struggling to realize what's happening with Tesla right now. And that just shows, again, we like it, Adam Jonas. He has positive things to say about Tesla. Okay, but the fact of the matter is deliveries are not slowing down. That's not correct. Model Y is virtually non-existent in Europe yet, and deliveries have just started in China. So, assuming the Model Y is going to sell pretty well, which is a pretty fair assumption, deliveries are going to massively accelerate. The whole 40-45% fall in deliveries in January in Europe, the scary headlines that have sent markets lower, well, Tesla lower, is really only a 9,000 drop year over year from January of 2024 to January of 2025. In 2024, Tesla delivered 18,000 vehicles, yes, Model Y included. And in January of 2025, Tesla delivered 9,000 vehicles in Europe, mostly Model 3s, almost no Model Ys. I mean, it's pretty clear that's not really a demand problem. That's people waiting for the new Model Y. Okay, now Adam went on to say that Tesla's humanoid robot opportunity is not factored into their bull $800 or base case $430 target, but is becoming serious enough to move Tesla stock. And look at that, the Tesla Model S and X delivery windows have increased to as much as 4 to 5 months, up from 4 to 8 weeks in Europe for all variants. The soonest delivery date is now July through August for new orders. Usually this is always a good thing when delivery wait times are being extended. It's 10 weeks or longer to get your hands on a new Model Y. I mean, that's usually always a good thing unless there is some kind of supply constraints or something affecting this, which the Model S and the Model X, I don't know why there would be a supply constraint unless, you know, obviously Giga Berlin is starting to produce more Model Ys, focusing less on the Model S and X. That could be part of it, but typically a longer waiting time is a sign of strong demand. And here we do have lots of new Model Ys spotted at Giga Texas today in the outbound car parking lot. And it is being reported today that new Model Y deliveries have officially begun in the United States. It also appears that FSD Supervised could be launching soon in Australia. In Tesla owner's account page, the invoice document under My Account now shows Full Self-Driving Supervised, where it used to show FSD Package. Elon said a few days ago that Tesla was able to launch FSD Supervised in China using publicly available video on the internet of roads and signs in China and use that to train in simulation. And according to the Chayanakshya Intellectual Property Information, Tesla Inc. recently applied to register a Tesla FSD graphic trademark under the international classification of its website services and scientific devices. And Elon Musk says that they may program Teslas to start honking if people try to key them or vandalize them, which is a great idea. And the new Tesla Model Y will make an appearance in Australia this weekend at the electric car show in Sydney. GVEC today announced a landmark partnership with Tesla, making the cooperative the first in Texas to participate with Tesla as a utility-scale virtual power plant resource. In other words, GVEC is teaming up with Tesla to use home battery systems as part of a bigger power network. This means that Tesla Powerwall owners can help support the Texas power grid by allowing some of their stored energy to be used during times of high demand. And Tesla has reportedly finalized the location for its first showroom in India. The company reportedly leased a space in Mumbai's Bandra Kurla complex. Tesla's first showroom in India will occupy a 4,000 square feet space. In a new arson attack, a dozen Tesla vehicles were torched outside a dealership near the southern city of Toulouse in France last night. An investigation has been opened into this criminal act, according to the prosecutor's office. Ford reported a 9% drop today in its auto sales for February, while Toyota reported a 5% drop in the US during the same month. Sales of Ford's gas-powered models fell nearly 13%, while its electrified sales, EV and hybrid, rose about 23%. Isn't that something? Causing some of the downside that we have seen in late trading today, Trump says tariffs will go on external products April 2nd. This is on external agricultural products. And also in bad news today, Israel will resume the Gaza war in 10 days if the impasse persists. And OPEC Plus announces that they will proceed with output hikes beyond April. And this did lower oil markets today. Oil fell about 2.5% on this news. Great news for inflation, but you also wonder how much of this could be due to the recent weakening in economic data. This morning, we did get ISM manufacturing PMIs that came in just really bad across a couple different specific metrics here. The headline number didn't come in too terrible. It did miss expectations, coming in at 50.3. The estimate was 50.5, but only a slight miss there. But under the surface, it looks much worse. Manufacturing employment came in at 47.6. Last month was 50.3. The estimate was 50.6. So that was a big miss. Look at that. Construction spending month over month, negative 0.2%. Expectation was 0% or even as high as positive 0.3%. Last month was positive 0.5%. So that's really bad. Manufacturing new orders came in at 48.6 versus estimates of 55.4. That was a massive miss. And manufacturing prices came in at 62.4 versus estimates of 55. So that missed to the upside. So higher inflation in manufacturing, weaker activity. Not exactly a great setup for markets, and that's what initially caused the weakness this morning. Fed Musaliam says there are good reasons to think that productivity growth is persistent. Fed Musaliam says restrictive monetary policy still needed to ensure inflation returns to 2%. But look at that. Fed Musaliam says, quote, outlook is for continued solid economic growth, but recent consumer and housing data pose some downside risk. First time we've really heard a Fed official say that, yeah, the economy's weakening. I mean, after all, the latest Atlanta Fed GDP Now tracker for Q1 is now negative 2.8%. Now, the Atlanta Fed GDP takes essentially the latest data point and extrapolates that, okay, and makes a prediction saying basically if all the data comes in like the data we got today, we're going to be at negative 2.8% GDP for Q1. This number will come back up. But the deeper negative you get, the harder it is to see a strong GDP print for Q1. So either way, even if we're not negative, which we very well could be, it's not going to be 2% or so as kind of everyone was forecasting. And again, Fed Musolium says recent data suggests downside risk to economic growth. And Fed Musolium says signs inflation expectations unanchoring would concern him. And the SEC is now dangling a $50,000 incentive for employees to resign or retire. If you were offered $50,000 to quit your job, would you take it? Trump says that America will not put up with the war in Ukraine for much longer. This follows comments by Zelensky that they want to end the war as soon as possible, but it looks like they're not even close to ending the war. And there is more talk about Trump potentially ending all military assistance to Ukraine. And U.S. Defense Secretary Hegseth tells all civilian defense staff to reply to the Doge email. And this was some of the hesitancy markets faced in the beginning of trading today. It says the Trump administration has not, as of this moment, reached out to formally notify Canada that tariffs are coming. They don't have to, but they have done this in the past. Senior Canadian government source cited by CBS correspondent on X. And U.S. Commerce Secretary Lutnick says Trump wants automaker manufacturing jobs back in the U.S. U.S. Commerce Secretary Lutnick says Trump will have to decide on tariffs this afternoon to be announced tomorrow. And honestly, what I think is happening here is, with the 25% tariffs, Trump has kind of preconditioned the markets to be happy with 10% or 15% tariffs on Canada and Mexico, and that looks to be the direction that we're probably headed in. And it was also reported that Trump will have to decide on tariffs Monday afternoon. They are set to go into effect tonight at midnight. And at least at the time of recording this video, it is a pretty ugly day. The Dow is down 345 points, down 0.8%, S&P down 0.86%, NASDAQ down 1.32%, the Russell 2000 down about 1.4%, the VIX also up 8% today to 21.16. So the VIX continuing to break out as fear continues to build, and that just really means people are going out and hedging portfolios. And here on the day today, 10-year Treasury yields are trading lower by about 5.5 basis points, down to 4.176%. I think a lot of this really just has to do with the weakening economic data. And really, we haven't even seen anything yet. Now, of course, today is off to a pretty crazy start for markets, but this week is really going to get even crazier, obviously, with whatever happens with tariffs. But on Wednesday, you have services PMIs from the ISM, you have more Fed speakers. On Thursday, you're going to have initial jobless claims, exports, imports, balance of trade. You get a new GDP update from the Atlanta Fed. Fed Bostic, other Fed speakers on Thursday. And then on Friday is really the big day. Non-farm payrolls, unemployment rate, Fed Bowman, Fed Williams, Fed Kugler, and Fed Jerome Powell will be speaking. So yeah, this is going to be a very volatile week, to say the least. Here on the day today, the CNN Fear and Greed Index did rally sharply from what you had on Friday, which is interesting considering markets are down again. The previous close you had was 19. Let me just refresh this, make sure we have the most up-to-date data here. Previous close was 19. Now you're at 27. So you jump from extreme fear, now in fear. Pretty close to extreme fear nonetheless, but this does potentially pave the way for more downside. If you fall further from here, you could fall back into extreme fear. That's something to keep your eyes on. Now, here on the day today, the percent of stocks trading below their 50-day moving average falling down to 39.7%, down about 2% on the day today. And markets are still pretty damn bearish. And obviously, you guys already know that the overall fear in markets, you really haven't seen this much fear since the bottom of the crash in 2022, when everyone thought we were going into a recession and the S&P was down 27%. In fact, on average, when you are this fearful, the S&P is down over 25% from all-time highs. So this is like an anomaly with the S&P down 3-4% from all-time highs. Kind of strange, but it just goes to show how bearish people are. Typically, this is a contrarian indicator. Normally, you want to be buying when people are this bearish, but this time around, I think you really want to be patient and selective with what you're buying. A stock like Tesla that's down 40% from all-time highs could be a very good buy here. The S&P down 3% from all-time highs, yeah, it's just not very attractive to me. Now, we do have some notable earnings as well this week. Today in after hours, you have GitLab. That's the one that I really want to pay attention to. Mid-cap AI name. Google owns about 10% of the company, so definitely want to pay attention to that one for the AI software trade. Tomorrow, pre-market, Target and Best Buy are going to be the big ones, really just to judge the state of the consumer. Tomorrow in after hours, CrowdStrike, Box, and Ross. Again, Ross, judge that consumer. Same is true for Wednesday pre-market, Abercrombie & Fitch, Foot Locker. Wednesday and after hours, Marvell, Rigetti, Zscaler, MongoDB, Viva, Victoria's Secret, and others. Thursday, JD.com, Cracker Barrel, Kroger's, and then Thursday in after hours, Broadcom, Big Bear AI, Costco, Gap, and others. As far as the biggest expected movers from this week's earnings, you have GitLab today, 15% plus or minus. Target, Best Buy between 9 and 10%. CrowdStrike as well, around 10%. Ross at about 8%. MongoDB, Wednesday, 15% up or down. Marvell about 13%. Zscaler 12%. Viva 9%. JD.com 10%. Broadcom at about 10%. Costco down here only at about 5%. And Kroger at about 6%. Now tomorrow, as far as your economic data, we're really not going to have much. You have the RCM TIPP Economic Optimism Index coming out at 10 o'clock in the morning. Again, some of that confidence measure we want to see improve for the bulls. The bears obviously want to see this get worse, expecting this number will get better from last month's number of 52, expecting this to rise to 53.1. So expecting a little bit of improvement. And then Fed Williams speaks at 2:20 p.m. tomorrow. But I think tomorrow could be about the tariffs, what is announced later today, what is implemented tonight, if there is a delay, if there is a lower tariff amount, maybe it's not 25% on Canada and Mexico, maybe it's 15%. That could actually be seen as a positive for the broader markets. But again, we don't know exactly what that's going to look like until we know, and we don't know how the markets are going to react to it until it happens. But I do imagine if we only get, and I say only, a 10 to 15% tariff on Canada and Mexico that is on everything, that is probably going to be taken as good news by the markets, and it wouldn't surprise me if stocks did continue to bounce, or at least trade sideways, maybe bounce this 50-day moving average on the SPY, and your highest beta stocks for that matter would probably, do what they typically do and bounce a lot more than broader markets. But again, I'm only speculating here. Maybe it's 25%. In that case, that would definitely be negative for markets. Now, specifically today for Tesla stock, you have a lot of very bullish option flows from hedge funds and institutions. You have 255 different trades totaling $350 million with a positive order value of 75%. So again, on another relatively bad day for Tesla, looks like a red day for Tesla, you have very positive option activity. That's a great sign. What's an even better sign is 659,000 shares of Tesla that are being covered by hedge funds and institutions today. Like, they continue to cover on short positions. I believe the short interest should be falling below 2% very soon. You're already sitting at the lowest short interest in Tesla's entire history. Like, hedge funds and institutions have never been this bullish on Tesla. And that's a fact. That's a quantifiable fact. So take out the emotions, take out the noise on a day-to-day basis. Hedge funds and institutions are bullish on Tesla, which I know is crazy for some of you guys to hear, but that's the reality. Tesla continues to run about 4,000 different ads with Google, and if we go ahead and refresh the inventory numbers for Tesla, Model Y plummeting down to 5,400, Model 3 stabilizing at about 3,800, Model X at 1,900, Model S at 1,300, the Cybertruck at about 950. So this looks pretty good. And now markets are pricing in the first Fed rate cut June 18th, 2025. But by the end of this week, you could be pricing in a cut coming as soon as May. if the data is really bad, it could be by March. Now, the odds of a cut for May is, this is really what you probably want to be watching at this point. The odds of a cut sit at 35.3%. The odds of a continued pause sit at 62.7%. If we continue to get bad data, May for a cut is going to be on the table, because March 19th is the next Fed meeting. You basically skip over April and then you go to May. So it will be fascinating to see how pricing evolves for March, but there's only a 6% chance of a cut March 19th. And I think that has a lot to do with tariff uncertainties that the Fed really has, and how that will affect inflation. But as notable investors like FundStrat's Tom Lee has recently said, I mean, tariffs are probably going to be deflationary. They're probably just going to be bad for the economy and not inflationary as most people are expecting. Now, again, for Tesla stock, as I said, heading into today, you are probably going to get a bounce up to that 310 to 325 level. The stock bounced today to about 304, getting pretty close to that 310 level. I think if the tariff announcement is not super negative coming tonight into tomorrow, you probably get that bounce in the coming days. Again, as high as 325. But I think investors will continue to sell the rallies in markets and in a stock like Tesla as the data continues to get worse. If Friday's jobs report is bad, like, we're not going to rally on that. That's going to be bad news. If ISM services data is bad on Thursday, we're not going to rally on that. That's going to be bad news. Actually, it might be Wednesday. Let me just make sure I'm getting these days correct here. Yeah, ISM services is on Wednesday. Like, that's critically important. And I think really the economic data is going to factor into what happens next to markets. It's not just all about tariffs. So even if the tariff situation goes away, sure, that's an overhang that is off of our markets. I wouldn't expect it to just go away. We're going to see some tariffs, and this is probably going to be with us for a while. But it's also about the growth scare and the economic data. So with that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.